In the summer of 1969, overnight, on the whim of a Prime Minister, without debate in press or parliament, 14 private sector banks were nationalised. The feat was repeated in 1980 with 6 more banks. Today, public sector banks with total assets of over 70 lakh crore rupees stand at the crossroads. As citizens, we need to reimagine their future. But this time, we want to do it with abundant debate across the nation involving the best minds in the country. CNBC TV 18, as the country's premier business channel, has taken up this responsibility to conduct these discussions on catalyzing public sector banks. We are calling it PSB 2.0. And today, to take this discussion forward, we have with us someone who has been in government and in the Reserve Bank, been the banking regulator and the monetary authority for a very long time. I have with me Dr. Bimal Jalan, former Governor, Reserve Bank of India. Dr. Jalan, thank you very much. Sir, at the outset, this is not a fault-finding mission. This is a mission to look for correctives to the public sector banking system, which appears to have more problems than the private sector banks. If you look at NPAs, for instance, the worst case in the private sector bank is about 7.5%, but the worst case in the public sector banks is 25%, and there are about half a dozen banks with NPAs over 20%. The biggest of them, State Bank, has NPAs of over 11%. And now we have a new threat of frauds as well in the public sector banking space. So first up, sir, not to find fault, but really where is the problem? Is it poor regulation by auditors and the regulator? Is it indifference and lack of motivation in the management of public sector banks? What's gone wrong?
You know, Latha, this is a very important issue you are raising, and I just want to make one point to you to begin with, that public sector banks, are part of government. So as you can see, in terms of the functioning of our government, there may be many problems in terms of execution. Yes. You see what I mean? In the sense that you have a whole structure, the administrative structure in our country is multi-layer. So if you want to do something, it requires a lot of permission and lots of movement of the files from one ministry to another ministry to somewhere else. So the main issue is in terms of take public sector bank as part of government, and just as in terms of education or in terms of health or in terms of insurance, you want these services to be delivered.
Yes.
So the main issue that we have to tackle in the future is that not that public sector banks are not necessary. They are, in my view, an important instrument to outreach the people. You have private banks you talked about. They are very good and we are very proud of them. But if you look at the outreach of the private sector banks, they will be much more limited than, say, outreach of the public sector banks. When we are talking about public sector, take it in a larger context, that we are talking about delivery of banking services to the people.
Yeah, I take your point.
Now, to come back to your main question, is that what is it we can do to improve the functioning of the public sector banks? And I think the main issue that we have to grapple with is that public sector banks, which are spread all over, decentralization. I am in favor of decentralization of the process. The government should decide on policy.
Okay.
That public sector banks or priority sector lending or what the interest rate should be and so on and so forth, that the Reserve Bank decides. The two combination, the Reserve Bank and the government,
yeah.
They would decide what should be the policy, what should be the interest rate, what should be the outreach and so on and so forth. But the governance part, that is how a public sector bank should be run, that must be delegated and decentralized to the what you might say an autonomous agency. We have banking board, bureau and so on and so forth. But I would say that what we need to do is, you think of public institutions like, say, UPSC.
Okay.
If you look at UPSC, if you look at the Election Commission, they are public institutions and they deliver. The largest free and fair elections in human history is delivered by Election Commission.
Absolutely.
If you look at all our IAS administrative system, it is through the UPSC. So what I am saying is, essentially, I am trying to emphasize is, and you ask yourself the question, that why is it that we have institutions of this type, we have institutions of CAG type, and they function very well, because they don't have to report to the ministry. But what they do, they are accountable to the parliament. So supposing now today, if you took a look at the public sector banks and you have a banking bureau, so you don't need a department of banking per se.
Do we need 70% of the banking sector to be dominated by these kind of banks? That is government-owned, majority government-owned banks. Should we look for a legislative change whereby the government owns a smaller number of banks and some of them the government allows its stake to fall below 50% so that what you exactly say, administrative controls are reduced?
No, but I think you should, you have to first concentrate on the functioning of different public sector banks. I mean, supposing we have set up a public sector banks in an area where the amount of business is very small, where the organization is very difficult to have with top class bankers and so on and so forth, then the best thing to do is to close that bank, for example, because it's non-functional. I'm just giving an example that if something is not functioning, if something is not delivering what you have set it up to do, then close it.
Okay. So you would go to the extent of closing down some of the public sector banks will not be a bad idea.
No. If they are non-functional, if they are making large losses, if the fiscal cost that you are incurring is much larger than the benefit that you are getting from having that particular bank, you can close it.
I spoke to Dr. Ahluwalia earlier on this same topic, and he was suggesting that government can have a big voice in the strategy of a bank, even if it held, for instance, 30%. Is that something that you would recommend?
No, I don't recommend, but I think when you're talking about Montague Ahluwalia, he's a very thoughtful person, and there can be different views. I mean, of that there is no question.
Okay.
But what I am trying to emphasize is that the main part that we have to try and tackle is the relationship between what you might call ministries of the government,
yes,
and banks of the government. You see what I mean.
Yeah, you don't want the Department of Financial Services.
Of some of our public institutions.
You don't want the Department of Banking Services. You would rather have something like a UPSC.
No. But if you have the Department of Banking Services, the Department of Banking Services will be monitoring the progress of how the government money is being spent. So that's different. I mean, the example of UPSC, etc., that I gave, that it is not the public sector part of the problem. It is what we are doing with a particular institution and in making it function much better than what we are at the moment able to achieve.
What, according to you, is ailing the current system, especially that big fraud of $2 billion that's dominating headlines? Would you say that this is just a localized failure of checks and audits? Or would you say that it's been a more larger failure, that the Reserve Bank failed in its regulation, that auditors failed? Is it a larger systemic problem?
You see, this issue has been discussed, quite. This is very distressing, what has happened. And we have to go and see exactly why it happened. I mean, how do you allow this kind of functioning of a bank over a period for 3-4 years? If there are some abrupt thing, then you can say, yes, this happened and this was abrupt and we have handled it.
Yeah.
But if this particular problem has been prevailing in a public sector bank or for a long time, for a fairly long time, then that should be tackled. And it is, if the officials and so on have been doing something, then the board is responsible, or then that scrutiny, audit, etc., that should be something which would reveal what is happening. And that can be completely, it has nothing to do with public and non-public. It is the governance part. Why did this happen?
Okay. That
you can lend this amount of money to one company. How? I mean, this is not something which can be done overnight.
Let me come to another tricky point, sir. Whether it is the UPA or the NDA combinations, political parties have not encouraged, have not even entertained the idea of bringing government stake below 51% in any of the banks. do you think that this is going to be politically unsellable?
You see, no, I mean, that's a very important issue, politically unsaleable. I mean, I don't think this is politically unsaleable as long as these are government banks. So if you decide, supposing, to lower the amount of holding, I mean, you can do it. I mean, because it saves the shareholding of the government and it has the money. But it doesn't resolve the kind of issues that we have been discussing.
Okay, well, let me go a step further. You know, if we have to reduce the stake below 49%, first of all, it cannot be governed by the Banking Companies Act. As Dr. P.J. Nayak had said, we should probably move it to the Companies Act. Now, if one does that, then boards can be more independently appointed. They will reflect shareholding. There can be independent board members. Right now, under Banking Companies Act, they are government officials who are board members. So, bringing down below 49, accompanied by banks moving, say, to the Companies Act, can mean complete reconstitution of the board, can mean competitive recruitment. Can't it be, more than just cosmetic change?
No, but these are not interrelated. You can, for example, supposing you have reduced it to 49%, but it's up to the government to decide exactly what the governance system would be, still a majority holder. Just as in the in private sector banks or any other bank or any other institution,
okay.
I mean, including media, I mean, it depends on how much, it doesn't depend that much on, I mean, it should be 51, that is majority of 51, more than 50. I mean, you can, whoever is the major shareholder, they decide.
You would still say that a legislative change is needed, or would you not?
Yes, yeah, I mean, that's also, yeah, that can also be done. I mean, that's not a problem. If I find, I mean, which we are doing day to day, every day. Mm. I mean, you introduce Bankruptcy and Insolvency Act, for example.
Yes.
I mean, that could have been done 2 years ago or 3 years ago or today. I mean, so and today we have the great advantage of having a government in power with a majority. It's not like 1989 to 2014, when we had 9 separate governments with short-term, with very short tenure, and then 20 parties meeting, and getting together and so on and forming a government. So now today you have the opportunity to make fundamental reforms.
Okay.
And I hope that will happen.
Okay. Well, on that optimistic note, sir, thank you very much, Dr. Jalan.
Nice talking to you, Latha, as always. Okay, thank you.
Okay. Well, that was yet another doyen of Indian banking and financial sector saying that the government needs to change its fundamental approach. What Dr. Jalan says is not enough that if you only bring the stake down, while that will be welcome, it should be accompanied by running the banks through a body as independent as, say, the UPSC or the CAG. We have to take a break on that note. We are coming back with another expert on the financial sector. Sanjeev Sanyal, the economic advisor to the Finance Ministry, joins in.